Hello. So in this video, I'm going to talk about mixed income earners. So when we say mixed income earners, these are taxpayers who are getting two things. Number one, compensation income, and number two, business income. So in the previous videos, I already talked about compensation income and business income, right? And I will be discussing this one in two parts. Number one, those who use the graduated rates. And the graduated rates, I already discussed this one in the video on business income earners, right? The graduated rates. And for graduated rates, it's either exceeding the VAT threshold or not exceeding the VAT threshold. Since we have compensation and business now, we will be using information on both. So let's start by using your compensation income first. You need to get your taxable compensation income. And since in compensation income, we don't have allowable deduction, it's always zero. This is also your gross compensation income subject to regular income tax, right? Write it here. So this is the compensation part. Now, for the business part, get your gross business income. For this one, we normally have two. Your gross sales or receipts, right? And then your other non-operating income. So you add these two for gross business income. And then write your allowable deduction. And this is business, right? Because in compensation, it's zero. And this allowable deduction, you can choose between itemized deduction or optional standard deduction. And I already explained this one, last time. To get your taxable income, write it here. And then, after getting the taxable income, you refer to the tax table, of course, to get your income tax from compensation and business because you use both. How about the business tax? You go here. It's either you multiply this one by 3% to get your percentage tax, or multiply this by 12% to get your output VAT. So it's 3% if you were not able to exceed the VAT threshold and 12% if you were able to. So that's the first part. Now, how about those who availed the 8% option? And 8%, this is only available to those who were not able to exceed the VAT threshold, right? As discussed in the video on business income earners. So same with the one earlier, get your taxable compensation income. This is also your gross compensation income subject to regular income tax. But for this one, after writing it here, this one, you automatically go to your tax table to get your income tax on compensation. This is what you do if you are using 8%. And since you already used the tax table, what happens now? You will lose the allowable deductions in your business income. Because if you are a business income earner and then you availed of 8%, you have allowable deduction, right, of 250,000. But if you are a mixed income earner and you use 8%, having used the tax table for the compensation removes you from the allowable deduction of 250,000. So once I compute for the taxable business income, I will not be deducting anything for allowable deduction, having used the tax table for my compensation income. So that's what happens. I will write it so you can see. So get your gross business income. And of course, this is your gross sales or receipts. Also your other non-operating income. So write the amounts here. And then for the allowable deduction, it's 0 already. What's the reason? Because you already made use of the tax table earlier. Okay? So that is what happens if you are a mixed income earner availing of 8%. So bottom line, if you are a purely business income earner and you use 8%, yes, you have 250. But if you are a mixed income earner, your allowable deduction is 0 because your compensation income will be taking that exemption. So let me proceed. So your gross business income here is also your taxable business income. That's what happens. So you have the amount here, and then you will multiply this one by 8% to get two things. Number one, your percentage tax because you were not able to exceed the VAT threshold, as well as your income tax business. So that's for the lecture. Now, let's try to answer some problems. Okay, so you're given this one. Compensation income of 1.5 million. It includes 13-month pay and other benefits of 120,000, but already net of mandatory contributions, your SSS, PhilHealth, Pag-ibig. And then you have gross sales of 2.4 million, cost of sales of 1 million, operating expenses of 600,000, and non-operating income of 100,000. Your task to compute the taxable compensation income tax on compensation, taxable business income, and your income tax on business, as well as your percentage tax, provided that you are using the 8% option, which is available to those who are not able to exceed the VAT threshold. So let's answer. First, get your taxable compensation income. This is also your gross compensation income subject to regular income tax. So you have 1.5 million. It's already net of mandatory contributions, so we don't have that anymore. And then for the 13-month pay and other benefits, we can only deduct 90,000 because that's the maximum. Meaning, the remaining 30,000 is still part of your gross compensation income subject to regular income tax. So here you have 1,410,000. This is your taxable compensation income, which you will use in your tax table to get your income tax due compensation. I already computed this one. The answer is 313,000. Now let's compute your taxable business income. So let's get your gross business income first. You have your gross sales and non-operating income. For gross sales, it's 2.4 million. Non-operating income, 100,000. And then allowable deduction, you cannot use 250,000 anymore because you used the tax table earlier. Actually, it's always 0 for mixed income earner using 8%. So this is 0 to get your taxable business income of 2.5 million. And to get the last requirement, multiply the base by 8%. The answer here is 200,000, and this is the payment for two things: the income tax on business and also the percentage tax. So let's try another. Okay, so let's try this one, same as with the one earlier, but the requirement for this one is to compute the total taxable income tax for compensation in business, and then the percentage tax. This time, you will be using the graduated rates. And this is just 3%. Why? Because the combination of your gross sales, this one, and your non-operating income does not exceed the VAT threshold. So you will be using percentage tax. Anyways, start with your taxable compensation income, which is also your gross compensation income subject to regular income tax. It's 1.5 million minus 90K. Answer is 1.41 million. And then place your gross business income. You have two, your gross sales as well as your non-operating income. That's 2.4 million and then 100,000. We are using graduated rates, so it's either itemized deduction or optional standard deduction. And since the problem is silent, we use itemized deduction. So let's get your cost of sales of 1 million plus your operating expense of 600,000. So that's 1.6 million to get your total taxable income. Answer is 2,310,000. This is the first requirement. And then after getting this one, you refer to the tax table to get the income tax due. The answer for this one, I computed it already, 589,200. How about the amount of the percentage tax? So you refer to your gross sales. Let's use this one. Multiply this by 3%. The answer is 72,000. Last one. Now let's try this one. You're given a compensation income of 150,000, including 20,000 worth of benefits. Gross sales of 2.4 million, cost of sales 1 million, operating expense 600,000, and non-operating income of 100,000. You are using the 8% option and you are tasked to compute the taxable compensation income, the income tax on compensation, the taxable business income, and the combination of your income tax business and percentage tax. So first, get your taxable compensation income, also your GCIRIT. So 150K, right? And then maximum of 90. Of course, you can deduct 20. This is 130,000. Refer to your tax table. Income tax due is 0, of course. Right? Now, let's go to the business side. Gross business income. Split into two. Gross sales. Non-operating income. For gross sales, 2.4 million. Non-operating income, 100,000. You're using the 8% option, but you are mixed income earner, so this is 0. Taxable business income is 2.5 million. Multiply this by 8% to get your payment for both income tax business and percentage tax. So that's it, no? Hopefully this is clear.